Your salary is one income stream, one employer, one decision that controls your entire financial life. Most people never question that, but more people in their 20s are building a second income alongside their job than at any point in history, and the barriers to starting have never been lower. Today, we are covering what side income actually looks like in practice, the most realistic ways to start, how tax works on extra earnings, the mistakes that waste time, and how to turn a small start into something meaningful. In this episode, why a second income changes your financial position faster than a pay rise alone, the most realistic ways to earn extra money alongside a full-time job, how tax works on side income, and what you are allowed to earn before it gets complicated, the difference between a side hustle and a proper business, and the one mistake that stops most people before they even start. A pay rise of £200 per month adds £200 to your income, but after income tax and national insurance, the amount that actually reaches your pocket is closer to £130. A side income of £200 per month earned through your own activity is also subject to tax, but critically, it is an income source you control entirely. You decide when to work, you decide what you charge, you decide whether it grows. One employer controls your salary, nobody controls your side income. That asymmetry, one income stream that someone else controls versus one that you do, is the real reason side income matters. It is not just about the money, it is about having options. Before anything else, the trading allowance. This is a government rule that says the first £1,000 of income you earn from self-employment or casual work each tax year is completely tax-free. No paperwork, no registration, no tax to pay. You do not even need to tell HMRC. This means if you sell things online, do a bit of freelance work or earn small amounts from a hobby, the first £1,000 is yours to keep in full. Once you earn above £1,000 in a tax year from side income, you need to register for self-assessment and declare it. But the trading allowance means almost everyone can make a start without any admin at all. Side income broadly falls into three categories: time for money, freelancing, tutoring, consulting, delivery driving. You earn when you work and you stop earning when you stop. Selling things, physical products, handmade goods, second-hand items, digital downloads. You create or source something once and sell it repeatedly. And content or audience, writing, video, podcasts, social media. This takes the longest to generate income but can eventually earn while you're not actively working. Most people start in the first category because it produces income fastest. Many eventually move toward the second or third as they build skills and confidence. Freelancing means selling a skill you already have directly to someone who needs it. Writing, design, photography, coding, video editing, social media management, bookkeeping, tutoring, translation. If you are employed doing something, there is almost certainly a version of that skill someone will pay for outside your job. The starting point is simpler than most people expect. One piece of work, one client, one invoice. That is it. You do not need a website. You do not need a business name. You do not need anything other than a skill and a way to get paid. Platforms like Fiverr, Upwork, and LinkedIn make finding that first client far more achievable than it was 10 years ago. Selling is one of the most accessible side income routes because almost everyone already has something to sell. Second-hand items from your home on eBay or Vinted, handmade products on Etsy, niche physical products sourced from wholesale suppliers and resold, or digital products, templates, planners, presets, guides, created once and sold repeatedly with no ongoing effort. The key distinction worth understanding early is the difference between reselling and creating. Reselling has a ceiling. You run out of things to sell. Creating a digital product or a handmade item that people want does not have that ceiling. Your first sale might take weeks. Your 100th might take minutes. Building an audience through YouTube, a newsletter, a podcast, social media is the slowest route to income but the most scalable. The income comes later. Advertising revenue, sponsorships, affiliate commissions, selling your own products to people who already trust you. The reason it's worth mentioning is that many people in their 20s are already creating content out of habit. The gap between creating content for free and creating content that earns money is usually just consistency and a basic understanding of how monetization works. If you already make videos, write posts, or share knowledge regularly, you are closer to this than you think. This is the part that puts most people off, and it should not. Tax on side income works exactly the same way as tax on any other income. It sits on top of your salary and is taxed at whatever rate applies to the combined total. If you earn £35,000 from your job and £5,000 from a side income, your total income is £40,000. You pay tax on the £40,000 as a whole, with your personal allowance applied first. The only difference is that side income from self-employment is reported through self-assessment, a once-a-year tax return filed online. The first time feels daunting. It is actually straightforward for most people with simple side income. HMRC's free online system walks you through it step by step. When you earn money through self-employment, you only pay tax on your profit, not your total earnings. Profit is what is left after you subtract your business costs. If you earn £3,000 freelancing and you spent £400 on equipment, software or materials to do that work, you pay tax on £2,600, not the full £3,000. Allowable expenses include things like equipment, software subscriptions, a portion of your phone bill, travel to client meetings, professional courses relevant to the work, and a proportion of your home costs if you work from home. Keeping a simple record of what you spend as you go means you pay only what you genuinely owe, and not a penny more. You need to register as self-employed with HMRC once your side income exceeds £1,000 in a tax year. It is free to do and takes about 10 minutes at gov.uk. Registration means you will file a self-assessment tax return each year, a summary of what you earned and spent. You do not need an accountant for simple side income. The HMRC online system is genuinely manageable for most people, and there are free resources that walk you through it. One important thing to get right from the start: put aside roughly 20 to 25% of every payment you receive into a separate savings account. That covers your tax bill when it arrives, so it is never a surprise. Most people wait until they feel ready. They want a proper plan, a professional website, a business name, a fully formed idea. None of that is necessary to start. The most important thing in side income is finding out whether anyone will pay you for something, and the only way to find that out is to offer it. The first client, the first sale, the first paying subscriber, that is the only proof that matters. Start small, start messy, start before you feel qualified. The people who build meaningful side incomes are not the ones with the best plan. They are the ones who started earliest and learned the most from doing it. Once you have your first paying client or first sale, the question becomes how to build on it. 3 things that consistently move side income from occasional to reliable. First, do not keep it secret. Tell people you know what you offer. Most first clients come from personal connections, not cold outreach. Second, raise your prices sooner than feels comfortable. Most people undercharge significantly when they start. If nobody has said no to your rate yet, your rate is probably too low. Third, reinvest a portion of early earnings back into the activity. Better equipment, a relevant course, a simple website. Small reinvestments early tend to produce disproportionate returns later. A few tools worth knowing. For freelance work, Fiverr and Upwork for finding clients, Wise or Monzo for receiving payments cleanly, and a free invoicing tool like Wave or Invoice Ninja for looking professional from day one. For selling products, eBay, Vinted, Etsy, and Gumroad for digital downloads. For content, YouTube, Substack for newsletters, and Ko-Fi or Patreon for audience support. For managing money, a dedicated business current account, even a free one like Starling or Monzo Business, keeps side income separate from personal finances from the start. Separate accounts means clear records, and clear records means a much simpler tax return. 3 mistakes that waste time and money. First, spending months preparing instead of starting. You do not need everything in place before you earn your first pound. Over-preparing is often just fear dressed up as productivity. Second, pricing based on what feels comfortable rather than what the market pays. Research what others charge for similar work. You are almost certainly leaving money on the table. Third, not keeping records from the beginning. Every time you earn and every time you spend on the side income, write it down or take a photo. Doing it as you go takes seconds. Reconstructing 6 months of transactions before a tax deadline takes hours. There is a point at which a side income stops being a side hustle and starts being a business. That point is different for everyone, but a few signs suggest you are crossing it. You're earning consistently rather than occasionally. You have repeat clients or returning customers. You're reinvesting meaningfully. You're spending more than a few hours a week on it. None of this changes anything overnight. The tax rules are the same, and the self-assessment process is the same. But the mindset shift matters. A business has a strategy. A business thinks about growth. A side hustle is reactive. A business is intentional. The transition is worth noticing when it happens. Here is the part most people do not think about. Side income invested consistently compounds the same way any money does, but with an extra advantage. You built it. You can grow it. An extra £300 per month from a side income, invested in a stocks and shares ISA at a 7% average return, becomes approximately £37,000 over 10 years. Not because of the returns alone, but because you are adding new money every month. If the side income grows, which it often does once you have the first clients or customers, those numbers grow too. The combination of earned income that you control, directed immediately into a tax-efficient account, is one of the most powerful wealth-building tools available to someone in their 20s. 3 specific mistakes worth calling out. First, mixing side income with personal spending money. The moment extra earnings land in your current account alongside your salary, they get spent. They do not feel like a separate income stream. Open a dedicated account. Keep them separate from the first payment. Second, ignoring the tax until it becomes a problem. The tax bill on side income arrives months after the money was earned. If you have already spent it, the bill feels impossible. Set aside 20 to 25% of every payment as you receive it. Third, giving up too early. Side income almost always starts slowly. The first few months rarely feel worth the effort. The people who build something meaningful are the ones who stayed consistent past the point where most people quit. You do not need a big idea. You do not need to quit your job. You do not need to be an entrepreneur. You need a skill someone will pay for or something someone wants to buy and the willingness to offer it. Start with the trading allowance on your side. Start with one client or one sale. Keep simple records. Set aside a portion for tax. Reinvest a little. Raise your prices. Build from there. The difference between one income stream and 2, even a small second one, is not just financial. It is the knowledge that your financial life does not depend entirely on one employer's decisions. That is worth starting for. Next week we're covering investing. What it actually means, how to start, and why waiting until you feel ready is the most expensive decision you can make. Subscribe so you do not miss it. New videos every week.